Aloha and welcome to the Sylvan Bell Business Growth and Exit Strategy Podcast, your guide to building companies that command maximum multiples. I'm Sylvan Bell, author of 5 books on business strategy and sales, creator of the Sell Framework, Scale Framework, and Driver Test. I work with owners of $10 million to $250 million companies, whether you're scaling for growth or positioning for a profitable exit. Each episode breaks down one framework, strategy, or concept you can apply this week to grow revenue systematically, scale operations, and maximize enterprise value. Let's get started. Welcome to episode number 17, the difference between a lifestyle business and an asset. Today is going to be filled with ideas, concepts, strategies, and even questions for you. So let's start with this. If the business stops when you stop, you don't own an asset, you own a job with freedom today can quietly cap the value tomorrow. So if you don't have a team that can continue on without you, that's not just a minor ding, that's a major ding. And you're going to lose out on multiple and you're going to lose out on exit value. When you take a look and you're like, hey, Scott, what's the difference? A lifestyle business is owner-centered by design, built to serve the owner's schedule, the preferences, and the income needs. It's all about you. You. An asset is built for independent cash flow. This survives a change in ownership and even a different manager or even a different operator. And what you're going to find is investors want to know that when you hand off the keys and you ride off into the sunset, that 99% of the things that need to get done are going to get taken care of and they're going to happen without you. That you don't really need to be part of the business, around the business, inside the business. You're the person that goes in and makes sure that everything's running properly. You are important. Don't get me wrong. You're absolutely important. But there's an operator or a general manager in that business can run everything without you. When you take a look at the real trade-off that you're going to have, it's not good versus bad. It's freedom versus value. It's your freedom versus the value you're going to get in the future. Lifestyle businesses, they really optimize flexibility. Assets optimize transferability and buyer confidence. What you really want is to have an asset that you can turn the keys over to, as I just shared previously. And I'm hammering on this on purpose because it's so important. Don't get me wrong, lifestyle businesses, they can throw off some cash. They can get you paid. But at the end of the day, when you go to sell your business, what the investor, what the business owner, what private equity is going to want to see is, can they keep the earnings? Can they keep the earnings without you? Can they make magic happen if you're not in the room, if you're not in the door, if you're not in the building, if you're not in contact? When an investor, when a buyer comes in, when private equity comes in, they're going to say, hey, how many of these relationships have to run through you? And the relationship could be a vendor. The relationship could be a client. The relationship could be an employee. There's like 3 places in there that could really cause you problems. But what you want to know is if that you're the bottleneck, you're going to have a tough time winning. And what you want to do is you want to have documentation about how items, problems, issues, successes in the business flow without you being the key person. And sometimes this is hard for a founder or a business owner to hear because they're like, I built this business and everything's about me. It's their identity. And I will share with you, sometimes your identity will get in the way of you saying, hey, I really need to let this task, this position, this idea go. Because if you're the key person, you are the key risk. You are the reason that there's going to be dings and dents in the valuability. The transfer's got to happen really without you. The transfer is the strategy. This is what you're looking for. You want to be able to turn this business over to somebody else and say, hey, here's the keys and here we go. I say this a lot because it is so important. You want operations, documented processes, clear roles, clear reporting, decision processes, decision bands, decision rights, and functions so that you can transfer, so that you can walk away, so that you can have that magnificent multiple and go live on a beach and never have to wear shoes again. That's my ideal, right? Your ideal may not be my ideal, but when people say, hey, Scott, what's the thing that you want? I want to never see snow in my life. I never want to have to put on a jacket. I don't want to be cold, right? If I want to wear a t-shirt or an Aloha shirt, that's what I'm wearing for the day, but I'm not wearing shoes. When you have a lifestyle business, you have limitations. You have only a certain set of buyers that are willing to make that purchase, and they're going to lower your multiple. They're going to give you a lump sum of cash, but it's not going to be anywhere near what you thought it was going to be. You're going to get holdbacks. You're going to get conditions to the money that's supposed to be changing hands. You're going to have the possibility of not getting the amount of money that you wanted, because where there's risk, there's a lot of shrink of price. There's a lot of money that's going to be taken away. And the way that this is referred to is we're going to right size this deal. If you ever hear we're going to right size this deal, you have to know there's money that's being taken off the table, and it's hardly ever theirs. It's almost always yours. And message from your sponsor, Sylvan Bell. That's me. If you're getting value from this episode, here's how to go deeper. First, subscribe to my weekly newsletter, The Party, at scottsylvanbell.com. That's where I share the strategies, frameworks, and case studies I don't release anywhere else. You'll get one actionable insight every week you can implement inside your business immediately. Second, while you're on the site, download the complete Sell Framework, Scale Framework, and Drivers Test, all free with scoring guides, worksheets, and step-by-step implementation checklist. These are the same frameworks I use with $10 million to $250 million companies to build systematic revenue, scale operations, and maximize enterprise value. Go to scottsylvanbell.com right now, subscribe to the newsletter, grab the frameworks, and let's keep building companies that command maximum multiples. Let's get going. You absolutely want the optionality of having an operations person, a general manager that's inside of the business, because this is where the value multiplication happens. You get more buyer types, you get better terms, you get more timing control, you have the ability to walk away when you want. Owner-dependent models reduce optionality because fewer buyers want that transition risk. Like the time that you turn the keys over and walk away, that's a really risky part of the business because a lot can go wrong. People can leave, clients can leave. And so what you thought, I'm going to give you a random number. If you thought, hey, business valuation's $1 million and you lose 20% of employees and you lose 20% of the clients, you're not going to get dinged 20% on the deal. You're probably going to get dinged 40% or more. And so you really want to know that at the time of handoff, somebody is there that is skilled, talent, and the capability to do what you used to do, and you really don't need to be there anymore. Sometimes this is an ego issue of saying, I don't know what I'm going to do. Well, if you're planning 5, 4, 3, 2 years in advance, then what you're going to do is you're going to figure out, hey, what am I going to do with my time? What am I going to do when I no longer have this office? What am I going to do when I no longer have this role, this position? What am I going to do, and how am I going to act when I don't have to be here in the morning? I don't have to leave in the afternoon after everybody. I don't have to show up to meetings. And these are all things to think about as you're preparing for your exit, because they really do matter, especially for founders that are integrated really well into a business and not used to giving up roles and responsibility. You get rewarded for having discipline. And discipline looks like this: consistent KPIs, repeatable offers, a bias towards simplification inside of the office over customization. Customization is the one place that really is difficult to scale because you can't control costs, you can't control labor, you can't control talent. And at the end of the day, you're constantly trying to fix a problem with a deadline that you don't know if you're ever going to meet. Lifestyle businesses will typically tolerate this because the owner, the founder, can make it work. We can get some band-aids. We can hold this thing together. We can make some magic happen. But it's not repeatable. It's not something that somebody can walk in on day one and say, okay, how am I going to make this happen? There's a lot of extra instructions. There's relationships. There's personnel. There's handoff. It just makes it complicated. Anytime you have complications, that's a ding. That's a dent. That's money that's coming away from your multiple, from your offer, from your exit. Customization is cool on small scale, on very small scale. It's tough to get to where you want to be on huge scale. Take a look at it from this perspective. If the business has to fund a specific lifestyle for today, it can block reinvestment in systems, in leadership, in personnel, in products and services. And that investment ripples throughout the business and over time. And what will happen is an investor, a buyer, private equity will come in and say, hey, you don't have all the necessary tools in place. We're more than willing to do it. We're more than willing to come in and make the money that you didn't. But there's going to be a cost to it. Like that but is going to be super expensive. It's going to be a part of a multiple, a number on a multiple, or even just a chunk of a holdback that you may never, ever see. And what it turns down to is long-term discounting. And to reiterate, lifestyle businesses typically have smaller exits, smaller multiples, more contingencies, longer transition time where they're going to want you in the building because you're the person everything has to run through. And then more of the buyer controls over the terms. They're going to say, hey, there's all these holdbacks. There's things that we're not going to pay for. Assets give you a larger buying pool, higher confidence, cleaner structures, and more favorable time and leverage. My belief is this, that if you're going to sell on the first of the month and it's a Monday, that weekend, you're in the office, you're in the building, you're in the shop when nobody's around, and you have movers come in. And they come and they empty out your office. They come and empty out your building. And then at 7:30, 8 o'clock, you do the transition meeting and you walk away free and clear. That's the ultimate dream. That's what I shoot for my clients. Like, hey Scott, what are we planning on doing here? Well, we're going to plan on an execution that looks like this. If somebody's coming in to buy you on a Monday, you're leaving on a Monday. Now, don't get me wrong. They may request that you stick around for a week or so, but you're not going to leave all the stuff in the office. You're not going to leave all the stuff in the shop. You know that at the end of the day, what you walk away with is everything that you wanted and everything you negotiated for. Because under an LOI, what will happen is they'll say, okay, what's excluded? What are the assets that are excluded? And you're going to make a list. Like, I want to keep my desk. I want to keep my computer. I want to keep my art. And they're either going to say, yeah, that's cool. Or no, we're going to keep the desk. You can keep the computer. And it becomes a negotiation term. You want to be able to walk away free and clear and say, hey, either you're going to buy everything. This is a complete asset or stock purchase and you get everything. And I'm just going to walk away at the bare minimum, or I'm going to load up a truck before everybody knows about it, because it's awkward. You know, being inside of a business where you used to be the owner, where you used to be the boss, where you used to have an identity, people will come to you and go, hey, and then they realize like 30 seconds later, like, oh, you're the wrong person to talk to. I don't come to you anymore. You don't want to have that experience. You want them to like, okay, I'm going to give you a random name. Bob is here. Bob's taking over. Anything that you need runs through Bob. We no longer have control. This is all on you. You want to build a machine that preserves freedom, defines roles, documents execution, and install a cadence that runs weekly without you. The goal for you is to be gone well before you want to sell your business, because that transition will be much easier for you. Your goal is not to work more. It's to make performance less dependent upon you, your decisions, and how you operate the business. So I'm going to give you a 90-day move, a 90-day maneuver. And so here's what you're going to do is you are going to pick one dependency category. It could be sales, it could be operations, it could be delivery or finance. And you're going to remove a single point of failure. So if sales is dependent upon you, you're going to build a repeatable pipeline and a process and assign ownership to somebody else. If you're the bottleneck inside of the business when it comes to accounting, minus you signing off on the checks or minus somebody else signing off on the checks, you're going to figure out a way to get out of the accounting. If operations require you to define and make decisions, you're going to figure out a way for you to not be in ops. It's really going to help you out and get the best multiple that you can. What you really want to do today is choose intentionality. You can have a lifestyle business by design, but it's going to cost you on the exit. Or you can have an asset business by design, and on the exit, you're going to get everything that you wanted. But if you only have to pick one, which way is it going to be? You know what's going to happen if it's lifestyle. You're just going to run things the way that you're running them right now. But if it's going to be asset, it's going to be documentation, it's going to be KPIs, it's going to be org charts. And at some point prior to you selling, like a year before you selling, it's going to be hands off. Because then that way you can prove the multiple that you're shooting for, and it's the maximum multiple. Mahalo for listening to the Scott Sylvan Bell Business Growth and Exit Strategy podcast. Here's what's available to you right now. First, subscribe to this podcast so you get every framework we release. Second, visit scottsylvanbell.com to access the Sell Framework, Scale Framework, and Driver Test. All free with complete scoring guides and implementation worksheets. Third, subscribe to my weekly newsletter, The Party, where I break down strategies and frameworks you won't find anywhere else with one actionable insight every week. Go to scottsylvanbell.com and enter your email. And if this episode added value, share it with another business owner building a $10 million to $250 million company. Until next time, keep building companies that command maximum multiples. Aloha.